Hello traders and welcome to another video review. Today is Tuesday, July 15th, 2025. Let's take a look at the economic calendar for today. So what do we have here? Overnight data were mostly dominated with Chinese data. In the meantime, we got the BRC retail sales monitor from the UK, beat the expectations of 1.2% with the actual number of 2.7%. GDP in China down from 5.4 to 5.2%. Fixed asset investment down from 3.7 to 2.8, but overall GDP better than the forecast of 0.9% with the actual number of 1.1%. Up to date, the the GDP is at the level of 5.3%. The industrial production in China up from 5.8 to 6.8, beats the expectation, and the unemployment rate is at the same level of 5%. We are still waiting for the data from the European Union. We got the Spanish CPI just slightly increased, Polish CPI up from minus 0.2 to 0.1, and the overall CPI is at the same level of 4.1%. We are waiting for the data from the Germany. Current conditions and economic sentiment data are scheduled for release at 11 o'clock, together with the industrial production and economic sentiment data from the Eurozone. OPEC monthly reports is scheduled for release at 1 o'clock. At 2:30, we got data from the US CPI and core CPI data. The market participants expect the CPI to increase from 2.4% to 2.8%. New York Empire State Manufacturing Index data are scheduled for release at 2:30 as well. At the same time, we got some data from Canada. The same situation here. CPI and core CPI data together with the manufacturing sales are scheduled for release at 2:30. FOMC member Bowman speaks at 3:15. At 5 o'clock, we got global daily trade price index from the New Zealand, and then we got the Bank of England Governor Bailey to give a speech at 10 o'clock, and at 10:30 we got API weekly crude oil stock data. Now, quite busy day and quite a lot of the data from China. So without any further ado, let's go to the charts. We start with euro dollar. The 4-hour time frame chart of the euro dollar is showing us a deterioration of this market after this pin bar here was done at 1.1830. So let me just place a technical resistance line at the level of 1.1830. Moreover, we need to place another line here, 1.1118. So we are building the supply zone. It's obvious that the market participant has been trying to break above this level, 1.1811. So between 1.1811 and 1.1130, there is a very, very strong supply zone on 4-hour time frame chart. Now, trend line, it's obvious that this trend line is being respected. This trend line is the key line for the bulls if they want to continue the up move. So we will make this line thick. We have the first test, second test, almost third test, and now the market is below 100 periods moving average. Nevertheless, the bulls are trying to move higher on the 4-hour time frame chart. We got the actual local technical support and local low 1.1655. So that's the support, and we obviously got this level here, which is the technical support, and more importantly, this is some sort of the demand zone as well. So we got these 3 levels here that constitute the demand zone. They are located between the levels of 1.1615, 1.1642. So this is the situation that the euro dollar is now in. We are going to watch this situation, because it looks like this market is quite interesting. We are waiting for the breakout above the trend line and the test of the 100 periods moving average with this kind of a momentum, which is apparently trying to break back above the level of 50. Any breakout higher means test of the 100 periods moving average, test of the trend line obviously, and then possibly even movement higher towards the next technical resistance located at 1.1714 and 1.1750. So that's the euro dollar. Let's take a look at the US dollar versus the Japanese yen. What is going on? What is going on here? As you can see, we've been moving sideways since the low of the April 22nd 2025. So let's just go back to this 4-hour time frame chart. There is definitely something to manage to place on our chart, which is this trend line. Let me just make it orange and then a little bit like this, and then make it thicker so anyone can see. The market respects this trend line. We can even place it something like that, even it's not a problem. And the market respects this trend line as it is approaching this level here, the swing high from June 23rd, right? 148.03 is the technical resistance, and it's the key level for the bulls. They need to break above this level in order to continue higher. We got the strong technical support at 147.19, and there is one more level, interesting short-term, of course, short-term level of technical support at 147.53. So far the outlook remains bullish, despite the fact that there is some kind of a bearish divergence visible on the 4-hour time frame chart. Nevertheless, with this kind of a strong momentum, the outlook remains bullish. This is the next target, 148.03, but we might break above this level in order to continue way higher. And obviously British pound is moving lower towards the technical support. This technical support is located at 1.3369, so that's the major level here for the bulls. They need to defend this level in order to continue higher. Nevertheless, since the top located at 1.3787 made on July 1st, we got this movement to the downside. We got this very interesting development below this obviously orange trend line. So right now bears are in charge of this market. They are pushing the market lower. We are already below the technical below the 100 periods moving average, which is obviously the dynamic technical resistance. We are below 1.3571, and we are below this swing low 1.3225 as well. So those are the technical resistance levels, and the market keeps grinding lower, despite the fact that we hit the extremely oversold conditions on the 4-hour time frame chart, and now some kind of a pullback is being made. Nevertheless, as long as we stay below 100 periods moving average, below the trend line, below the technical resistance, the outlook remains bearish. Crude oil. The crude oil went down from the levels of $78 per barrel, and this is the major technical resistance here. There you go. It went down towards the level of 64, exactly $64 per barrel. So right now there is some kind of a pullback to the upside, but it doesn't actually look very dynamic. The recent high from the July 14th 2025 at 69.64 is now being considered as a local technical resistance, and as you can see, we got bearish engulfing pattern, and the market is trying to break below the local technical support located at 66.45. Any breakout lower means that this low from the this is the June 24th, June 24th is next for a test. Momentum is negative. There's some room to the downside. There's room to the downside here on the crude oil. It looks like we have some kind of a reversal on the crude oil. Instead of that, the Bitcoin is grinding higher, slowly but surely towards the new all-time high. It made new all-time high at the level of 123,265. We got this pin bar here. So right now the market reversed. Today it doesn't actually look very good, because the market is now looking quite heavy. So maybe the test of the 111,770 is next. So if we switch from daily to the 4-hour time frame chart, we can see that possibly this breakout might be tested soon. The local range technical support at 116,610 is now being tested. Any breakout and continuation lower is very bearish, and the next target is roughly around this technical support. The momentum, as you can see, went down sharply because we got this bearish divergence on a 4-hour time frame chart between this high, and of course on the RSI indicator there is no divergence whatsoever. So that's why we got the technical pullback right now on the Bitcoin. It's not the trend reversal. The trend remains up on a short-term time frame, mid-term time frame, and long-term time frame for the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.